Hey everybody, I hope you're all doing well. Today I would like to chat about stop loss management. So this is tied in directly with risk management, and a lot of different traders have different perspectives on how to manage your stop loss, but today in this video I would like to go over my personal preference and why it is my personal preference. So basically the management system is trailing, okay? So instead of taking partial profits, we're going to be trailing our stop loss based on market structure. Now as you can see, I have a diagram drawn in front of me, and we're going to go over that in just a minute. I also have 3 tips here. We're going to go over these one by one. So first and foremost, set a hard take profit. Now what do I mean by that? Let's get out our short position tool here. Basically a hard take profit just means a set price point where your trade would close itself, right? We all know what a take profit is. So that means just setting in those numbers in your execution platform at an absolute best case scenario for your trade outcome where your trading platform would close the trade without you having to manually interfere. So that's a hard take profit. It's important to set that because, these moves never just go forever, right? We want to target our best case scenario and then trail the stop loss throughout the trade. So that's the hard take profit. Now, number 2 is focus on swing structure, okay? So what do I mean by that? Well, as you can see in the diagram in front of me, we have clear market structure in bearish order flow, right? Multiple breaks of structures to the downside. We have solidified lows, solidified highs, solidified lows, solidified highs, etc., etc. So focusing on the swing structure is the only way that we can actually trail our stop loss, because within all of these moves, we have a bunch of substructure, right? We're going to go over a real chart example in just a moment, but I just want to go over these tips briefly on the diagram first. So we don't want to pay attention to substructure. We only want swing structure, okay? So how do we identify swing structure? Well, if you've watched the market structure course module, then it'll make more sense. But basically, whenever a break of structure occurs and price creates new structure, that's how we can identify our new swing structure point. So we have a solidified low here. We have a high, which was our entry point based off of this area here. And this move creates momentum to the downside, which breaks this structure, right? Now, after that structure is broken, we need to see a retracement. A retracement is the only thing that's going to solidify this low, right? Because if we just start doing this and then it goes again, that's not a solidified low. So we need a correction, which is what we see here. That correction needs to stop and then reverse, breaking the structure again, which is what solidifies this high. So I know that can get confusing, but basically, as soon as a new break of structure occurs, the point that was responsible for that break of structure is our new swing structure, okay? So this high right here is where we would place our stop loss, because we know that it was responsible for a break in structure, and because that's our most recent high now, if price were to break that high, that would be an invalidation point for our trade, and we would no longer want to be in that position because market structure would be turning to bullish rather than bearish, okay? So the next tip here is trail your stop loss after every swing break of structure. I kind of just went into that a little bit, but yeah, so basically as we can see, we have multiple break of structure points here. After every single break of structure happens, we move our stop loss further and further down the line. Okay, so this is just securing profits as we go, because as you can see at the last part of the diagram, as soon as the structure starts to change and shift in the other direction, our stop loss would get triggered and we would be left with significant profit. Now, this is much more profitable than taking partial profits, because this allows you to ride the totality of a trend with full position volume, okay? So rather than taking off 50% here, 30% there, you just ride your full volume as long as you can ride it, right? So this is how people achieve the 20 to 30 to 40R trades by managing their stop loss like this, because psychology-wise, it would be very difficult to set a 30R take profit and just wait and see what happens without any sort of security, right? So this trailing stop loss system is basically just a form of security, because we know that if something unforeseen occurs in the market, let's say it's news driven maybe, and it creates an impulsive movement in the opposite direction of our trade, then we know we're protected because our stop loss has been trailed the whole time and it's actually pretty close to current price action. So if price reverses on us, in the opposing direction, we're left with a very healthy profit. So those are the basic tips that I wanted to go over. Now let's head down to the actual chart, because there's a great example here of how this could be played out. All right, so we're on GBP USD on the 1 hour time frame. Just to be fully transparent, I would never really take an entry off of this time frame. This is just an example, right? Of course, this strategy does work for any time frame. I'm more of a low time frame execution type trader, but like I said, this is just an example. So we're on the 1 hour time frame. We have this point of interest here that turns out to be a perfect entry. Not going to go over all the details, but basically it caused a minor break in structure. It was most likely reacting to a higher time frame supply zone to the left. But again, this is just an example here, right? So we have our entry zone here. We created multiple minor breaks of structure. We created a solidified low right here. Price retraced, triggered the 50% of our point of interest beautifully, and then started taking off from that point on. So as soon as we broke structure here, that first of all, it validates our trade idea of going short, right? That's a validation. Now, as soon as we start retracing higher up, that's what solidifies this low as new structure, okay? So at this point in time, we wouldn't be able to move our stop loss. Maybe we could move it to break even. I don't really like to do that very often, because oftentimes price will tap the entry and then take off again, and you're just left scratching your head. So I don't like the break-even method very much. I will do it sometimes, but it just really depends on the situation. That's up to your own discretion. So as soon as we have a solidified low, we're watching the charts intently at this point, because we're waiting for a solidified high and a break of structure. And after that first break of structure, that's when we can trail our stop loss, okay? So it's not a solidified high until it breaks structure, right? Because when it breaks structure, we know that bearish order flow is still intact. If it didn't break structure, then there's no telling if it could go higher and higher and higher. We have to see that break of structure to confirm it as a solidified high. So in this case, of course, we kind of topped out here and then impulsively moved down, creating this clear break of structure. Like I said, as soon as that happens, we can then place our stop loss to this point here, just above the high, just to give room for spread and a little bit of room just in case price comes back up and decides to create equal highs and then move lower. We just want to give it a little bit of room. You don't want to make it too tight. Now, at that point in time, we would have successfully secured 4R. Okay, so that already is significant. That's wonderful. That's already a successful trade. But the whole point of this method is none of us can fully, truly predict how far the market's going to go, where it's going to stop, etc. We're not magicians. We just have to execute our trades and manage them based on logic. So my point is, if you set too modest of a hard take profit, like let's say you set your take profit for 4R or 5R, sure, it's a successful trade, but you may be leaving so much on the table, which would be unfortunate, right? So basically, we would have secured 4R, but the trade keeps going. We see clear bearish momentum, so it would be best to capitalize on that, right? If order flow is still intact, then why not capitalize as much as possible? So let's get the brush tool back out here. So we have another solidified low because we start making a corrective move from that point. As soon as we top out here, we wait for the break of structure. As you can see, we have a clear impulsive break of structure to the downside. So that solidifies this whole market structure here. So of course we would move our stop loss from this point down to this point. So again, let's check the risk reward. We would now be at 6.3R. That's a lot better than 4, isn't it? So this, again, it's showing the importance of setting your hard take profit very far in the future, like as an absolute best case scenario, rather than being too modest about it. Because rather than 4R, you just secured another 2.3R on top of that. Now it's getting a little tight here, right? The price action is getting a little tight, but as you can see, we create another solidified low because we start making a corrective movement. Of course, like I mentioned before, the solidified high is not solidified until it tops out and reverses breaking structure, right? Because if it doesn't break structure, who's to say it's not going to go up here or up here? We don't know until it breaks structure and continues the current order flow. So as soon as that happens, as soon as the impulsive move to the downside breaks this solidified low, we can treat this as our solidified high. So our stop loss would move from here down to here. Now, I know that's not much of a difference. This is more of an aggressive management here, but it still does improve the secured risk reward ratio here. So we'd be at 7R instead of 6.3. So still a significant jump. Now, what happens next is interesting because we obviously create a solidified low at this point right here because we bottom out there and price starts correcting to the upside. However, just like I was saying up here, we never create a real solidified high because we never see another break of structure to the downside. This solidified low is not broken. So that tells me it's an early warning sign that price is going to be reversing and going from bearish order flow to bullish order flow. So yes, we kind of top out here for a little bit and then we start trading lower, but we're not able to break this substructure or this swing structure. So that's telling me again that bullish order flow may be taking control here, okay? And then of course we consolidate for a little bit more and then make an impulsive move to the upside, which would trigger this stop loss level right here, okay? So it would take us out of the trade for 7R profit. So although you may have a hard stop loss, somewhere way down here, that's fine, but the trailing stop loss system just allows you to capitalize on the whole move for as long as possible in the safest, most secure way possible. So although we had price action bring us all the way down to what would have been, 13 to 14R, of course it would be hard to look at that and not be able to take those profits. I mean, if you wanted to, you could take those profits and just close the position manually. We do have a demand zone here that price clearly reacted to. That was the whole purpose of, that was the whole cause of price going bullish instead of bearish, changing market structure here. So if you're aware of that, you could certainly set your hard take profit for this level. Maybe not lower, but you could set it for this level here because that is a very clear demand zone that had imbalance just above it and broke structure to the upside, right? So this would be a clear area for setting a hard take profit. So if you did that, you could have walked away with 13R in profit, full volume. But if you were aiming for much lower, maybe a higher time frame demand zone that you felt would be triggered, then this is the outcome that would have happened. You would have been stopped out for 7R profit, which is still an extremely healthy trade. You can't be mad about that. So this is just the example I wanted to go over with you guys to help you understand how to trail your stop loss and why it's more profitable than taking partial profits. Another thing I'd like to mention too is that it's much easier for journaling because you get what you get. When you're taking partial profits, it becomes very confusing to journal your trades accurately because the risk reward ratio that's represented on the parameter tool here is not the actual percent gain that you receive if you're taking partial profits here and there. So basically this is just a much more simplified version of securing your profits, and it also, in the long run, based on my experience, it allows you to secure more profits because you're truly able to capitalize on the entire move of the market without hindering yourself. So in some cases, for myself personally too, I will set a hard take profit level, but in hindsight later on, I realized that it was actually much too modest. Maybe I set a 5R target, but price actually ended up providing what would have been 20 to 25 to 30R because the trend just kept going and my hard take profit was actually wrong. So it's definitely better to set a not so modest hard take profit target and then just ride the wave, ride the trend as long as you possibly can using this technique. Okay, so once again, just to go over the basic concept, to really drill it in there, the 3 tips that I want to go over Set a hard take profit for your best case scenario, your absolute best case scenario, so that price can close out the trade, so your execution platform can close out the trade when price has reached your desired level. Now, number 2, focus on the swing structure and the swing structure only, okay? The substructure is not significant. It's not important when you're managing your stop loss. Number 3, trail your stop loss after every swing break of structure. Every time we have a new solidified high in this bearish scenario, that is where we move our stop loss. If it was a bullish scenario, it would be the opposite, of course. Whenever we have a new solidified low, we would place the stop loss just below that low. The whole point is we want to place our stop loss at a point of invalidation. Okay, so briefly going back to this real chart example here, just to drill in this concept, when we entered this trade, we put our stop loss above the high, right? Above these highs here, because that's the invalidation point, right? If price were to break this structure to the upside, why would I want to be in a short position, right? If we broke structure to the upside, that's showing that bullish order flow is still intact, so we should be looking for a buying position, not a selling position. So this is our invalidation point. We carry that same logic throughout the entire trade, right? We continuously place our stop loss at invalidation points. And as soon as price violates that level, our short position is invalidated and we should now be looking for long positions, okay? That's the whole reason for doing this trailing stop loss system. All right, so I hope you guys really enjoyed this video and gained some value from it, and I will talk to you all soon.